All right. Checking sound 1 2. Checking sound 1 2. What do we got here? We're back at it on the day. Yes, sir, we are going live one more time. And here I is one more time today, my friends. Let me get this here a bit. Let's yeah. Just making sure you guys can see and that I'm not too low because I think my chair is too low. Much better. All right. My fellow simpletons and degenerates, I am back once again. Sorry, guys. It's taking a little bit right now. I know I seem a little silly back and forth, but I'm putting this heat pad right on my back. And, I'm just trying to get as comfortable as possible. And I'm back here again because, man, I just keep hearing, people complaining. People send me some text today, some emails. And I'm just like, you know what, man? It's the market. I mean, it's just nobody's going to tell you what it's going to do. The market does what it wants to do. And that's how you got to live it, So I figured, you know what, man, I'm going to go one more time. I always get this one specific question, right? I get this one question for some reason, lots of people that I talk to. And that question is, when is the best time? When is it the best time to get into the stock market, right? When is the best time to buy? What stock should I buy? What's the hot stock? And quite honestly, it's not up to me, right? It's up to you. Like, when do you want to go and take the chance with investing? When do you want to take the chance with your money? When is it that you want to take the plunge and say that I'm done, just working day in, day out and not seeing any profits? I'm just tired of, getting up, going to work, coming back home, eating, going to sleep, going to work. And, vacation times come around and you have barely saved enough so that, you can have, a little nest egg and perhaps a catastrophe fund, right? You don't have any money to go for a vacation. You don't have any money to take a month off from work. We're in this hamster wheel, so to speak, right? And that's fair. However, there are ways in which you can just say, you know what? I kind of don't want to just do that, right? Look at me, for example. I was just at work, minding my own business, going about, just work. And next thing you know, I lend a hand to a couple of people at work, and I ended up, injuring my back, my lower back, just like that, done. I thought it was one of those things where it was going to be, I take, 3-4, I leave, put some ice in my back, and I'm back the next day. The next day, I couldn't even take a step. I really couldn't even get off the couch. It hurt so badly. And this was literally like 3 or 4 hours later that I woke up with some really bad back pain. And I felt, that back pain had migrated to like my buttocks and my hamstring. And it was really painful, From a 1 to a 10, it was not like a sharp pain, right? It was like a dull pain. It was like a 5, a 4 or 5, but it was just constant. And that's exactly what really bothered me. The fact that it was, constant, and it was just not letting me sleep. So next thing you know, I'm out maybe for a month, maybe for 2, who knows? But I'm not at the mercy of, being unemployed, right? I can breathe a little easier because I can make money in the stock market. Yes, I am going to be in workman's comp and I'm going to have some money coming in, right? But quite honestly, it's a pay cut for me. I actually like what I do. And I'm always working, especially overtime. And I love working double time. I'm a workaholic, and I just try to get as much as I can during a short period of time so that I can dump it, into my savings, my stock market portfolio, or to pay bills. And that's what I do, and whenever it is that I get the opportunity to to trade. I take it, but I'm not necessarily a day trader. I trade daily sometimes, but I'm not a day trader. Sometimes I'll go a week without really setting a covered call or buying back a cash secure put or trading in general. And sometimes I'll trade every day for like 2 weeks. But I'm not at the mercy of the stock market either, because I am always doing something, right? And I've set myself up to where like I have, monthly income coming in. It's really weekly, but I've adjusted it so that all the cash secure puts and covered calls that I've sold in the past 2-3 years, I got them geared to where they're expiring every month now. So like every month I'll have, a specific underlying stock expiring, and then a month from then it's going to be, another set of 5-6 stocks, and then the next month is the next 8 stocks, and so on and so forth. So I always got cash secure puts and covered calls expiring on the third Friday of every month, which is when the IV is the highest, when the volume is the highest. Anyways, so welcome. I'm the Savage of Wall Street. We are here once again. I figured I'm gonna go live because we had a little recovery. Remember, it was all doom and gloom in the morning, and I'm still bearish as far as what's going to happen. But tomorrow, we're looking a little bullish. So I would say thread carefully, just like I said this morning, right? But do not be afraid to take the bull by the horns, right? If opportunity rears itself, grab it and take advantage of it. I also wanted to discuss 5 stocks. I have my Savage 20, but these are 5 stocks that is my personal belief, and this is like not financial advice. This is for entertainment purposes only, but this is exactly what I feel, my humble opinion, right? And I can justify it, right? 5 stocks that I believe belong in any portfolio right now, of someone that really wants to take that next step and that are going to run. And when they run, and I mean when they run, I don't mean you're going to make $2 or $3 per share, sell, and you're done. I mean you're going to hold these for a while, and you're probably going to make 100% back in the next. I don't have a magic ball, but I'm willing to say that in the next year or two, you're going to make 100% back. And if you sell covered calls and do cash secure puts on them, you're definitely going to make a nice little coin, right? What do we got here? We got Kent's mom in the house. She's a twofer today, and I dig it. Kent's mom, how you doing? Greetings from the San Francisco Bay Area. I hope you are well. Thank you for always watching. You are a fan. I'm willing to call you fan number 1 because you have been at every one of my lives, and I appreciate that so much. You never disappoint. And I do know you're making money. I love the fact that you are, no holds barred, and you give them nothing and take from them everything. And so major salute to Kent's mom. Hector is in the house saying, good evening, Savage. And I say, good evening, my friend. The hour of power indeed. Kent's mom saying, all my stocks recovered nicely today. And that was expected. Remember how I told you guys that tomorrow we were probably going to go a little reddish and then start recovering. And in the morning, Friday, we were probably going to have like a little fake out breakout and like kind of recover in green. And then when Rugby starts speaking, we were going to dip, right? I still expect that, except tomorrow, instead of starting reddish, maybe we'll start greenish. Nobody knows what the stock market is going to do. Let's just get that out of the way, right? I don't know what's going to happen. People that make billions of dollars don't know what's going to happen. The stock market is an entity that does what it does. However, it doesn't hurt to be prepared, right? And it's okay changing your mind if with new data that you received on the day, you can say, you know what? I changed my mind. That's actually somebody that's educated. That's somebody that's got, 10 toes on the ground. and is able to say, based on new data, I have a new opinion. So, and there's nothing wrong with that at all. The visual artist in to start saying, my guy, what is good? Wow, every month, super dope. Yes, every month, sometimes every other week, every week, man. It's just, the opportunity rears itself. I see that my covered calls are at 50, 60%. And, they were written for 3 months down the line, and it's been 2 weeks, and I'm already at 50%. I'm not going to wait 10 more weeks to get the other 50. I'm out. I take money off the table, and I just cycle through, right? And then I'll wait for another day that the stock pops another 5, 10%, and I'm going to sell some more covered calls. Same thing with cash secure puts. If, let's say, I love catching stocks at 52-week lows, and I'll go 1 or 2 strike zones below where it's at. And I'll go 3 months down the line, and I get a big chunk of change, and say it recovers in 2 weeks, right? 3 weeks. And then I get, that cash secure put shrinks 60%. I'm not going to wait, another 2 months for 40%, 45, 50%. I'm done. I'm out. And that's just the discipline, Andres de la Torre is in the house saying, what do you think about Palantir? CSP cover calls? Both. I mean, I think I talked about Palantir this morning, but I'm going to talk a little bit about it now. I'm just going to say what I said last week. I was telling a couple of buddies from work that have Palantir, what are you waiting for? I just honestly would like to know where you're at. And they said, well, I'm waiting for it to get to 200, right? So I said, why don't you sell it at 200 now? And they were like, well, what do you mean? And I said, well, so if you sell a covered call out to June, right? The stock was at 180, I think, 175, something like that. I said, you can basically go out to January and say, I can sell this stock. I promise to sell it at $200, but guess what? I want to get paid for that. And I think the premium was anywhere from like 18 to 20 bucks. So they could have brought in $1,800 at least for that contract. And that contract this morning, I actually checked it out. I think on the live as well. That contract was worth like $6. So they could have sold at 18 and bought back this morning at 6. They would have made $1,200 per contract. So if they would have done 12 of those, they could have came in with $12,000 in their account. Even $1,200 is great. $1,200 is somebody's mortgage payment somewhere. So what do I think about Palantir? It's recovered, right? So again, you have the opportunity to go and see, the stock is telling you what to do, right? You can wait, and you can wait for it to go, I don't know, what is Palantir trading at last? Palantir Technologies is trading at $159 right now. So it's pretty much recovered the losses of the day. It's 159. So sell 175s. So if tomorrow, let's say Palantir keeps recovering and it goes to 165, sell 175s out to January. What's wrong with that? Worst case scenario, you receive $17,500 in your account January. What is wrong with that? The reason that you're in the stock market is to make money. Are you making money by doing so? Yes, you are. But the kicker is this. You can actually get paid for that, my friends. If you sell a call for 175 Palantir to expire January 16, 2026, right now, the last trade was $15.95. So you can basically bring in $1,600. It's recovered $3 since then in the after hours. So that 170, that is more now. That's probably going to be closer to 18, 19 bucks, right? So you can bring that in tomorrow. If, let's say, for whatever reasons, you do a covered call and it goes in dips on Friday, right? Great. Let's say it goes back to 140, 145. Well, guess what? Then you can buy back that covered call for half of the price. So you could probably, you get 1,800, you buy it for 900, 800 bucks. You just made some serious coin. Now you can go on the flip side. And if you think that the stock is going to recover, you can go and sell a cash secure put. But instead of doing a 140, right? You're going to do a 130. And then guess what? You do a 130 cash secure put, and this time you're going to keep the same strike date. You do a 130, and the stock backtracks. You could get paid around $1,000. So you're basically going to say, here's $13,000 because I think Palantir is going to recover, and they're going to give you $1,000. So worst case scenario, you get the stock at $120 a share. That's basically what you're going to end up paying. And so the stock can go to 175. So now it's all about you, whether you want to take that plunge or not. Do you want to put your money where your mouth is? Are you bearish, or are you bullish on it? That's all your prerogative. So I say both. It depends on just how much you believe in that stock, how much you think it's worth. Is it really trading way above what it's supposed to be at, or do you think it's fairly valued? It's trading at like 700 times what it's supposed, like forward PE, right? So you tell me, is that too much? Is it justified? Or do you think it could come down some, right? Misty Tree Woodcrafts in the house saying a double savage day, lucky 7 for sure. I am here again, once again, my friend. Juan Velasquez is in the house saying good afternoon, everyone. Good to be here, Savage. Go SoFi, RXRX, and ETHW. Okay, right on. Juan Velasquez saying I did write $30 Rocket Lab for January 26 as well. I'm going to go with a cash secure put there. I know you didn't write a $30 covered call. I know you did a cash secure put, so I think that's great. January 2027, actually, and I know that it's a cash secure put now. It's Ryan is saying, Savage, just starting from the beginning, saving some powder instead of going all in, but my SoFi 2027 put spreads are already starting to print. The Ivy Crush and price goes up to cash out in halftime. That's what I'm saying. Roaring Yeti is in the house. What's up, Booze? What is going on, Yeti? Good to see you. I haven't seen you for a few days. I'm guessing you're busy at work, so no big deal. You know what? Wolf is actually going to be an honorable mention today. How's that? You put me onto Wolf. I've been reading on it. It is a good stock. It's actually they have a lot of Bitcoin, man, and I see it going and trying to pivot from what they do into something completely different, which is AI, which I dig. I'm really excited and learning more about TerraWolf at this point, and I'm a fan, and it's an honorable mention. All right, I had for you guys 5 Savage stocks that that are my recommendation, right? That I think for myself, I'm definitely they are in my portfolio, but I think they're gonna make you quite a bit of coin if you take the plunge, and especially if you decide to go cash secure put these, right? Friday, for example, if we have a really bad day and it turns out that Rugman decides to pull the rug pretty badly and those stocks take a dip of 10, 15, 20%, I would go and buy the damn stock. So if you have some cash set aside, buy it at market price, or you could do some cash secure puts out forward in the money. So here we are. Let's see. Yes, cash secure put, says Juan Velasquez. CKT says thanks for keeping us immersed in the market, Savage. Appreciate your dedication to the community for sure. CKT, that's the point. The visual arts is saying keep hearing Wolf. Well, it's. I think you should start reading up on it. It's pretty good. I like it. I think the stock it's a good company. I think it's definitely going to make some noise. Kent's mom is saying CKT. Yes, I second that. I appreciate you, Savage. Thank you, guys. It's great to be appreciated. Always be writing. Wrote an AI January 27 $15 cash secure put for $349, and I dig that. $15 is okay with me. It would have been cool if you would have done a 20, man. Honestly, it would have been cool if you would have done a 20. A 20 would have brought you like, I don't know, maybe like 25% or more, 30%. But let's see, just out of curiosity, let's see, for an AI, what would a $20 cash secure put bring us? Sell a put 20. It'll bring us $640. $640. So you're putting away $2,000 and you get $640 back. It's almost 33%. I see nothing wrong with that at all. You know, it's a good percentage that you're getting for basically free money. It's a good stock. It's one that I appreciate and I've been making money with the last 3 years, and it never disappoints. That's all I gotta say. Which brings me to my next point. The 5 stocks that I recommend that are in my portfolio, and I think it should be on anyone's portfolio, especially if you watch me. I am definitely going to tell you to do your due diligence on them, of course, right? I'm not telling you to go and buy this right now, but definitely have a look see. BBAI, that is Big Bear AI, is the number one stock that I'm going to talk about right now. Big Bear AI last traded at $5.60. Okay. And Big Bear AI rebounds 1.82% after new NFL partnership. Dig that. NFL partnership, mixed analyst outlook, bucking a broader tech market decline. Now, the tech as a whole is selling off, right? But it's bucking the trend, meaning it's actually on its way to recover, right? I like reading that. It basically announced a multi-year partnership with the Washington Commanders, securing naming rights for the team's training facility and expanding its brand presence. CEO Kevin McLennan called this a strategic move to drive the next phase of growth. The deal highlights Big Bear's AI's push for tighter visibility and signals a focus of new growth channels beyond government contracts. Analysts remain divided after Big Bear's weak Q2 results and lower guidance. H.C. Wainwright and Cantor Fitzgerald both reaffirmed buy ratings, but lowered or held their price targets, citing long-term growth, strong cash position, and potential. Northland Securities and some investors are more cautious, pointing to ongoing contract risks and limited near-term upside, right? But that's on the near term. Any single stock that you're willing to put your money on should not be something that is near term for you. It should not be short term. We here, if you're watching me, you know that I am long term focused, and every single stock I hold, I'm willing to hold at least 5 years. And if you want to make real money, you're not going to try to time the market. You're going to spend time in the market, and that's how you make real money. You're not here for the week, for the month, for the next few months just to, see what you can scavenge. That's not the approach that I am trying to convey here. That's not the approach that I think is an intelligent one to have. It is not the approach I want you guys to take. I want you guys to take a long-term position. This stock, Big Bear AI, is it's one of those that it's very highly volatile. So don't be scared if it goes up 15% and goes back down 15%. Overall, you're long term on this, right? Look at this. If you want to get in on it, September 19th, cash secure puts. The stock is trading at 560. You could do a 550 cash secure put tomorrow if you wanted, and ask for 55 cents. So in a month, you'll be basically, if you don't get put these shares, right? You're basically bringing in 10% of your investment. So you're basically saying to the world, Here's 550 bucks. I'm willing to buy BBAI at 560 bucks on September 19th. And what do you get for your troubles and your belief in this company? $55. You do 5 of those, you get $550 back right off the bat. So you're putting 5,500 bucks on escrow. You're saying, I want 1,000 shares, if that's what you want to do, and you get back 10% of that right there. It's yours. And next month, guess what? If the stock is trading at 540, those are your shares now, my friend. You have 1,000 shares of BBAI. You can now turn around and go to October 17th and sell some $7 covered calls. Yes, sir. Yes, you can. $7 covered calls will bring you probably 70 cents, right? You can wait for a day that it spikes 10%, which happens often, and you can ask for over $1. Asking for over $1 on a $7 stock is wonderful. Let me tell you that right now. But you bought at 550, remember that. So you're now going from 550 to 7. So that's $150 difference. But remember, you got paid 10% of that. So you realistically bought under $5. But we'll say $5. So you bought at $5, you're selling at 7, and you're asking for $1. Do you see the difference? In 2 months, you made basically $300 on $550. So that's more than 50% back right then and there. And that's how you guys have to think, right? You're making money. The stock is making you money. So that is my first stock that I'm going to recommend. C3.ai, you guys know it has a place that it's a special place in my heart, man, because I've been trading it for so long, and I put so many people onto it, and they've been making back ever since. You know, it goes up to $35, $40, comes back down to the 30s, 25s, goes back up to $35, $40, comes back down, kind of at the mercy of the market. So much potential. There's not a lot of stock available, right? And the float is actually low. It's heavily shorted at that. So once the shorts get caught with the pants down, which is often, you can make a lot of money. Cash secure puts wise, I mean, it's a great company. It's actually taken a lot of contracts away from Palantir. That's all I have to say about that. So C3.ai, right? Last I checked, C3.ai was trading for almost 17 bucks. It's 16.95 right now. 16.91. Okay, 16.91. Tomorrow, you could go to September 19th and you could do some 16.50 cash secure puts. Do 16s just because you want to be fancy and get more money. Go to $16 cash secure puts and ask for $1. Stink bid at $1. So basically, you're saying to the world, September 19th, here's 1,600 bucks. I want 100 shares of C3.ai, but I want $100 for my problems, for my faith in the company. And someone out there, some gambler is going to say, I got you. And you're going to bring in $100. So realistically, you're buying for 15, right? On C3.ai, the 52-week low is 1470. The 52-week low is 1470. So you're pretty much buying at the 52-week low. There's absolutely nothing wrong with going in at the 52-week low. It has no business being there. And right now, it's just at the market, is at the mercy of the overall market and all the shenanigans going on. But I'm going to tell you this right now. C3.ai is a company that's here to stay, and it's going to stay here a while. They've had kind of a rough patch in the last few months because the CEO he has a degenerative disease, and he's basically going to walk away. But he's going to leave somebody at the helm that's going to do a great job. And also, it was downgraded by Wedbush, I think. It's the same guy that downgraded SoFi. This guy, that's what he does. He just wants to go out there and kick a company in the teeth while they're down because he wants to be that guy, but he's not. He's a clown. And so it's Dan Ives. That's his name. He's a clown. I completely believe that this stock is going to recover. And when it recovers, It's going to be a wonderful thing. A couple of years ago, it was trading over $100 a share, and it will get back to $100 a share. It's just a matter of time. I said Palantir was $100 stock a couple of years ago. You guys, it's on my videos. You guys can watch videos I was making a year ago, a year and a half ago, and I was saying Palantir is $100 stock. I used to get a lot of haters, trolls saying, "You're crazy. Do you know how many times a forward P earnings it has to happen for that to happen? That's not going to happen. That's unrealistic." And yet, where is it at now? So I don't pay attention to the trolls. I don't pay attention to the silly people that are saying, your numbers are off. This is blah, blah, blah. Like, what you have. I know what I've researched. I know what I look at. I know the metrics that I feel happy and confident when I read, and then I say, I'm going to put my money here. My hard-earned money, I'm putting it here because I think that there's going to be growth in the future, right? And so, what do we got? Always Be Writing says, oh, yeah, you wrote a... We Dealing Idaho's in the house. Willing Idaho's in the house saying, love free money, and I do too, my friend. Warren Yiddy is saying, I sold my Wolf calls, closed the cash secure puts, and sold the shares at 851. I would have made double it if I would have just waited a day. My timing needs improvement. No, it does not. No, it does not. Do not think that. You know what? You made money. You made a killing. You outperformed the market. If you were to not trade for the rest of the year, girl, you outperformed the market. You kicked the shit out of all these fucking dummies on Wall Street that think they're hot shit and make 30% back or 40% back in a year. They think that they're fucking God's gift to like Wall Street. And when we have people here on my channel making 110% back, all right? So don't think that. You never time the market. Don't do that. I got kicked in the teeth doing that, and it just happened with C3.ai when it went to like $19, and I didn't sell covered calls because I thought it was going to go to 20. Doesn't matter how seasoned you are. You're going to screw the pooch. You're going to make a bad call, and that's okay. Never apologize for taking money off the table. You made money. That's what matters. That's it. You made money. You made a good chunk of change, and now you can reposition yourself. And on Friday, you may get a gift again where Wolf may go back to like under $6, right? And guess what? And then you're going to go back in and you're going to do some cash secure puts and bring back some really, really good money. That's it. And that's what you're going to keep doing. This is what we do in this channel. We just keep making money. We do cash secure puts. We do covered calls. We rinse and repeat. It's that simple. Tom Kaufman's in the house saying, I just noticed you're live for the second time. I am. So my kids got out of school early today, and so I made some steak. I grilled. They're chilling, man. I showered the little ones, and my daughter, she's outside with her friend, hanging out. My eldest son, he got a little blister on his toe, and so he's out. He's in my room actually watching some TV, and he's got his foot up. And if he's out for the count, then my youngest son, who looks up to my eldest, he's there with them. So they're just chilling. My back started spasming a bit, so I figured I'm gonna go sit down on this heating pad, and so here I am. I'm sitting my butt down on this heating pad, and I'm getting a little comfortable, man, because my butt was hurting. Not really my butt; it was my lower back, and that's why you guys see me kind of go back and forth here around with a chair. And I know it looks odd, right? But like, just trying to get comfortable and make sure that my back it's. So the visual arts are saying reposition profits. That's fact. That's a fact. You're repositioning for some profits, and that's it. And never be scared and never apologize for taking profit. Matter of fact, I sold some. I bought back some puts today, even though it's a red day. I noticed that these cash secure puts, they still have a way to go. There were some January 2026s, and there were some 1250s and some 15 Weeble, and I forgot what close. But anyways, I made money. I think they were up like 30% at a point, and I got greedy closed them at 30%. And today I closed them like at 22%. Either way, I made money. But the whole point is that I'm I want cash, right? And I just want to get as much cash on hand as possible. I'm gonna do the same thing tomorrow. So if we have a fake out, breakout recovery, I'm gonna close some cash secure puts, and I'm gonna sit on like a chunk of change for Friday, because Friday I think we're gonna have a very red day. And if we don't, then guess what? I have a lot of cash on hand, so it doesn't matter. I can deploy my cash as I see fit. But the whole point is to have a plan, right? Um, Willie in Idaho saying I was trying to write covered calls on Bull Monday, missed by my price by 3 cents, and then it dips from mid 16s to low 14s, arms folded, all way to right. Sometimes that's why I sometimes I tell people, I know we're supposed to stink bid or stink ass, but if you notice that a couple of hours have gone by and it's kind of started running away from you, don't be scared to go like a penny above market ask, right? Or below. I mean, so you can get filled, and I mean, it's one of those where like really it's like $1, $2 is going to make that much of a difference when you're selling something for $300. I mean, at the end of the day, if you're doing 100 covered calls, right? But if you're doing like 3 or 4, I mean, really, are you willing to die on that hill? So, anyways, Roaring Yiddy is Charlie C2 is in the house saying hi everyone, and hey Savage, what's up, my boy? Roaring Yiddy saying you might look into trying Lion Make mushroom supplements for your back. It helps with nerve pain and neurological issues. I definitely have neurological issues. I'll tell you that right now, my friend. But yeah, no, I looked it up. I just haven't had the time. There's just a lot going on this week with me going to the doctors and the physical therapist, and my kids are back in school. So like I'm kind of like Mr. Mom right now. And I can't move as fast right now, so I take my time doing things. And then once I've been moving around quite a bit, if I go up the stairs a couple of times, even though I do it like pretty gingerly and only using my right leg, it's still I feel it in my back, and then I have to sit down. So it kind of sucks. Okay, let's see here. Webull is my next stock, my next Savage stock of the 5 I was talking about. So we talked about BBAI, C3.ai, and Webull. I like the stock, man. I like the stock. It's a good company. It's making money. People are actually paying a premium to have Webull Premium. It's going where Robinhood is, and it's international. They're working on so much international infrastructure that I am very excited to see where it goes. I have Webull, so why not? Why not dip in? It's actually at a very attractive price right now. Robinhood is over $100. Webull is the same thing. So what? You know what I mean? Only that one happens to be the darling of the shorters and Kenny, right? BlackRock and them. But you know what? At the end of the day, it's just a good company. I did poop on them in the past because I didn't like this contract they signed, but I looked at the fine print, and it's something they could walk away from. They're not bind it 100% by it. There's some metrics that have to hold, and if they don't, they can walk away from it. So all good. Which case I like Webull. I like Webull where it's at. I like the IV. I like the fact that you can get a nice chunk of change for your cash secure puts, and I like the volatility aspect of it because you can sell some covered calls and make a chunk of change within days, and then just get out and do it again. I mean, it's one of those that it's an option rider's dream. It's at 1440 right now. Tomorrow morning, if you really want to take a step and get Webull, you could sell a call, sell a cash secure put. It's at 1440, so you could do a 1450. And if you're like, I don't want to do a 1450, I want to do a $14 one. Guess what? You can round to 14, and we can do a $14 cash secure put, and you can ask for 145. You can get 10% right off the bat of your return on investment. Worst case scenario, you get $145 and then you get your $1,400 back in September. No big deal. Best case scenario, you have 100 shares of Webull. Let's say that the stock is trading at like 13.95 that day, 13.80. Now you have 100 shares of Webull. You can now wait for a nice recovery of 5-10% on a day when it trades, in the green, and that happens often. And you can sell a covered call, and instead of 15, you're going to do a 17.50, $17 covered call out in a couple of months. You'll bring in $1.50, maybe $2. What is wrong with that? Let's see. If you own it right now, you can sell a call. You can sell a September 19, $15 call. It's 14.40. Why don't you go to October? Go to October and sell a 17.50, bring in $155. Nothing wrong with that at all. Nothing. And that's how you play this game, my friends. I like Webull. I like where they're going. And at this point, I think it's kind of trying to find its footing, right? But remember, not too long ago, people were paying $80 for Webull. Right now, it's at $14, right? So that's like 70% off. 70% off. That's crazy, right? 75% off. Like, why wouldn't you buy that? Like, if you saw a sale of, like, I don't know what shoes you like, but like, let's say New Balances, right? And there's a sale of the shoe you've been eyeing at that's like $200. And then if there's a sale on it and they're like, it's selling for $50 today for whatever reasons. And you're like, okay, I'm going to buy two pairs. I'm going to buy a red pair and a black pair, or like a green pair and a red pair. I don't know, whatever pair you want to buy. But like that's what my point is. It's like you're supposed to take advantage of what the market gives you, my friend. Juan Velasquez is saying, Savage, I have a question. Way back about 4 months ago, I sold and was assigned last week 400 shares of AI at 24.60. I don't want to write covered calls on them. What would be the next strategy for me to do? Well, I would have told you to roll those 24.50s. If they're cash secure puts, I don't know if those 400 shares were there 25s that you did or 24s. I don't know. But let's say, for example, you did 25s, right? And you were assigned, or your break even price is 24.50. I need to know that. But my what I would do is I would sell some $15 cash secure puts out to like October. Right? I will sell some AI, it's at 16.92. So I would go to October and I'll sell some, you know what? Some 17.50s. I'll sell some 17.50s and I'll ask for $200. So now your break-even price is 15.50. So worst case, so say you get assigned those 200 shares, right? Let's just hear me out. So do 4 of them. You're now going to basically get $800 back, right? And then you have these cash secure puts that, if worst case scenario you get assigned at 15.50, that assignment is going to go and combine with the 24.60s, right? So now you have 15.50, 400 at, and 24.60, and then now your average is going to be like, I think, $20 or thereabouts. So now see what happened. Now you brought your average down. So now you have 800 shares at $20. So it'll be easier for you to write. Let's say, for example, AI recovers to $20. You can, now that your average is 20, you can sell some 22.50s out to like January and try to bring in a couple of dollars, right? So now you can make $800 that way. And if you get taken out, well, then guess what? Then you made money, because now you're back at, more than even, right? Because you made money. And if for whatever reasons, let's say AI is trading like below 20, well, then you can sell more covered calls. You get your stock back. You made $800, right? And And don't forget the $800 that you made when you sold the cash secure puts. I will take these $800 that you get from the cash secure puts and buy stock at the price that it's at right now, so you can start averaging down now, right? And then just see what the market tells you. And so for worst case scenario, let's say in October the stock is at, like, I don't know, 16 bucks, and you put those 500 or those 400 shares. Well, then you could do 4 more cash secure puts out to January. Do 15s this time, or 14s, right? So you get $1.50 for those. You're realistically buying at like $13, 12 something. So if you were to get assigned those now, that's bringing down your price from $20 to like 18, 17. So that's how I averaged down a lot. And I went crazy when the stock went and they dropped to like $11, $12. I just bought, I think like 20 cash secure puts, and then I used that money to buy right then and there at like $11, and it brought my average down. And then I put those shares, like I think in the 18s, 19s, and then it brought my average down. And then I'm sitting on all this stock, and then it ran to 30, 35, and I sold a ridiculous amount of covered calls, and then I brought in like $12 per share, $13 per share. And so you just have to have patience, and you can't let them putting shares to you at a strike that you chose bring you down. You know what I mean? Because this is why writing 1 or 2 strike zones below a security when it's being hit 15-20% is so key, so that average comes down. But I mean, honestly, that's not a bad problem to have. I don't think so. I mean, the stock was just at $27, $28, and so it's just a hit piece. You're at the mercy of the overall market. Everything is selling off a bit right now, especially tech, right? So I wouldn't worry, man. I say just keep doing what you've been doing. Some cash secure puts, I think, and you're back in the game. So I wouldn't trip off of this, brother. I know they were cash secure puts. I can guarantee they were cash secure puts. But you're fine. You're fine. Roaring Yeti saying it's not going to fix it, but it just might help. That's what I look for. I want it to help me. Also, I've been eating better and walking a lot. I haven't been walking a lot lately, but I've slimmed down a bit and I've lost a few pounds. I'm looking to probably lose 40 more, and then I should be somewhere where I think it's going to be better on my back. I've started doing some workouts that kind of hit my core, so that's going to help. Juan Velasquez saying, I'm thinking writing outrageous asking price in order to not be called and going down, doing it several times to make up for the loss. I mean, you don't have to outrageously ask anything, because you're not going to get filled, right? If it's something ridiculously outrageous. So what you're losing is time. The stock is sitting at like 16, 17 bucks right now, right? So I just gave you, it's at 16.90. So I gave you an idea. If you wrote 17.50s and then got $2 for them, you're now at 50.50. That's your break-even price, right? So like now, 15, say you do 1,000 of them. If you were to put those shares for whatever reasons, right, you're going to considerably bring your average down. Considerably. And now you're going to be having a really good time if you can put those shares, because the stock it does not belong in $16, $17 land. This stock is a $30, $40 stock, man. So it just happens that you are like, you got to put these shares at a time when tech is selling off a bit, and we have all this influx going on, right? There's talks of the interest rate cut not happening anymore, and so like all these things matter. This is why you got to pay attention to macros. right? And then you see whenever this is why you got to take big chunks. I tell you guys, don't write out a week or 2 weeks, write 2 3 months down the line and bring in dollars, and write 1 or 2 zones below the strike when you're writing where the underlying stock is at that day, right? So that if you are put those shares, you're okay. Example, I wrote on bullish, right? I wrote that $65 cash and cure put. I got $11 for it. And if I got put them shares at 65 because the stock is under 65 that day, that's fine. And if it was at 40, I have a plan. Like it hit 40, I'm gonna sell some $40 cash and cure puts or 35 cent out, to where I can get $5 6 7 a share, and then bring my average down. You have to think worst case scenario, right? And that's probably this is something this is gonna teach you. So you always have to have a plan. Willie Idaho saying nice. Willie Idaho saying earnings on Friday, and I'm looking forward to earnings, man. Juan Velasquez saying, of course, getting the Sting, the asking price. Um, yes, the average cost on 200 23.50s, and the other 200 was 25.66. So, not the worst thing in the world, man. It's not like you were trading Palantir, and then you did $200 cash and cure puts, and then they get put to you at $50 or like 150 or 140. That would sting, but I think you're fine. It's 400 shares. I mean, not great, but I think you recover. I think you just have to think, do some 1750s, and then try to get, even if you go to like January, try to get $3 4 for them, right? And then that's gonna bring your average even lower. But it's all up to you what you want to do. I mean, this is just, obviously not financial advice. This is what I would do. So the funny thing is I still have 5 37.50 contracts for January 26th and have not gotten assigned yet. What do you mean? So you did cash and cure puts at 37.50? Or are you talking about covered calls? Man, you got caught. You're in a pickle. I'll write those 1750 sides. You're right. It's just time, and I do believe it. Those premiums are juicy as sure. Yeah, no, like that's what you have to do. You know what I'm saying? When you get caught with your hand in a cookie jar, you have to have a plan B, C, and D. Because sometimes we all get caught. I got caught like on I think with SoFi. My average was like a $19 at some point, and then it went to like 15. I bought at 15 and came back. Then it went to 12. I did cash and cure puts for 12, and I got assigned, and it was painful. It was painful. And then when it went to like $5 a share, I didn't even do cash and cure puts. I just said fuck it. I bought like like 3,000 shares or something like that, and brought my average down quite a bit that day. But I mean, it happens, brother. You get caught. I mean, it's you have to have a plan. And if you would have made a plan, what if I get a put, assign these puts? That's kind of, I write it down. I write down my plan so that I could like visualize it. And you'll forget. You forget if you don't make the plan. Like if you don't write it down, you'll forget. So have a plan. See what what it is that you wanted to do. Cash your puts why, and then look at strike zones right below, right? So that you can say, if I get put these shares at this price, I want to wait, let's say for a down day, and then I'm just going to go and, go 1-2 strike zones below that, and, go out through 2-3 months and look for some premium. All right. And so RX is my next stock that I'm basically saying, guys, please get this in your portfolios. It's just my humble opinion, right? And you would not be badly off if you had a few hundred shares of RX on your portfolio. It's one of my babies. I've been trading it for a few years, and it just keeps making me money. RX is actually king, ding, and ling when it comes to premiums. And last I checked, RXRX was trading under $5. It is at 483. It took it on the chin today a bit. Not terribly, but it was at $6 not too long ago. I sold some 750 covered calls and some $10 covered calls, and I'm obviously getting paid that way right now. Still, those contracts are there. I'm not buying them back just yet. I want to see what's up on Friday, and then I'll go then. But I'm waiting to get put some $6 cash secure puts that my break even price is like $4.02. So great. I'm waiting for those 2,000 shares to get put. I think it's 2,000 one portfolio and 1,000 on another one. So I'm looking forward. I don't even want to roll at this point. I'm just trying to have that stock because I really want the stock. It's heavily shorted. It's very hard to borrow. The cost to borrow is expensive. And once the shorts get caught, this is going to $8. It's going to $8, and if it goes to 8, it's going to be like a hot knife through butter. It's going to 10. You can actually go to September 19th and sell some $5 cash secure puts and ask for 60 cents or 65 cents. I would say 65. Why not? So basically, you're saying I want to buy it at $4.35. That's what you're saying. Nothing wrong with owning RX at that price point. A great company. The IV is always between 80 and 100 on the contracts, which is juicy premiums to ride on. So writing covered calls, it's honestly the thing to do for me with RXRX, because either I get the puts the shares put to me and I keep adding, or I buy back the covered calls at a cheap price, and then I resell whenever it spikes, and it spikes a lot. So such a good stock to ride on. It's definitely one that I feel you guys would not be doing terribly if you had it in your portfolios. Roaring Giddy saying, I went into 10 cash secure puts and open for $3 for September 19. If I get assigned, it would be 257 basis. Totally okay with that. Totally okay. I would have waited for Friday, but I'm timing the market, and you're doing what you're supposed to do, which is you're taking what the market gives you. Totally okay with that. I already got paid a lot of money with Open Door Technologies. And at this point, honestly, I had covered calls that I sold. I sold some $3 covered calls out to 2026 and brought in a nice little chunk of change. It's paid me a lot of money this year. So if I'm gonna get assigned on some open, it'll be like 150s. And if it gets down to like 140, 130, then I'm gonna go and do some 150s and try to bring in at least 30%. Because I think that's the IV that's going to be that high. And so, but that's not a bad call at all. Not for September. I'm not mad at that at all. You're getting almost 20%, or above 20%, right? Let me see, 30. No, you're getting for sure 10%, 15%, 15 to 20%. That's not terrible at all, man. Not terrible at all. Juan Velasquez is saying, yes, 37.50 cash secure puts when AI was high. I bought in December 2024, then I got 974 per contract. That's not terrible though. You can roll. You can always roll. That's the thing. You can roll those to 2027, and then you'll just have that much more cash. You could roll them from, instead of 37.50s, roll them to 32.50s. I don't know if that's possible. And then what's going to happen is you're going to basically, even if it's for even Steven and you get no premium, you're going to get collateral back. So you're going to basically tie up your money, $3,250 until 2027, but then you're going to get $500 back right then and there. So what does that mean? That means you could go out of margin, my friend, and you could risk at least $3,250. That's what I do. But and I never go out on margin just because. I go out on margin just to buy back, cash secure puts and cover calls. And as soon as I buy back, I close, and then and I raise cash, and then I close that, and I make sure that I have enough cash to cover at the end of the day, and I pay nothing. I pay no fees. So Roy Judy saying it was a little FOMO. You're good, man. You're good. You did nothing wrong. You got over 10%. You're good. Misty Tree Woodcraft saying almost 35K open interest for that September 19 $5 cash secure put. It's a good interest, man. It's a good open interest, good volume. Look at the IV, right? So it's over, I think, 90%, around 90%, something like that. Not terrible at all. And so, like I say, RX has been paying me for quite a bit for a while. So last one is Soundhound, my friends. SOUN is the ticker, and that'll round out the five. I would like to round out the five stuff that I wanted to talk about with you guys that I think belong on any portfolio. Soundhound AI is a good company that I think it's making some really good strides. It's signing some contracts with some key players. The IV is insane. The volume is good. It's just a matter of time. I mean, it's taking it on the chin right now again because a lot of tech is taking it on the chin, especially the AI plays, right? But look, at the end of the day, nobody's going to tell you what to do with your money, right? But if you do your due diligence on these companies, look at what the bearish outlook is on them. Look at what the bullish outlook is on them, and see, is it worth it? Is it worth you risking a couple of $100 and starting a position on them via cash secure put, right? And start playing with it. And once you get assigned and start writing covered calls, you'll see that the volumes you get are so juicy that it justifies the volatility aspect of them, right? Again, I am not here advocating you guys go and dump like your whole portfolio, your whole all your money into like these stocks. You should always have a well balanced portfolio, and you should do know that past experience does not dictate future outcomes, right? But just given the overall feel of the market, just given the overall trend where we're going, I mean, there's a lot of discounts that are going to be available, and if you get these on a discount, there's absolutely nothing wrong with that. Obviously look at your SoFis, right? Look at your Unities. I think that, other stock is just so expensive. I actually, I talked about these because they're fairly cheap. They're near 52-week lows, and it's a good risk to take when you are, getting a company at a 52-week low. It's like it's a good risk to take. But it all depends on what your appetite for risk is, right? And are you someone who gets nervous seeing that your portfolio went down 5% on a day? You get skittish. Well, then you should buy some Google, buy some Amazon, buy some Nvda. But if you don't have that type of cash, there's nothing wrong with going into a little more, feasibly cheap stock, right? And starting a position on these, and then using premium for these to buy larger cap stocks, which I do. Nothing wrong with that at all. All right. So how do you know if it's better to write a short dated contract to write a leap? And how do you decide if the money is in the money or out of the money? Well, if let's say like the stock is $15 and you write a $15 cash secure put, it's in the money, right? And if you write like, let's say a covered call for a stock that's $15 and you write it for $17.50, then it's out of the money, because it's in the money it's 15 and out of the money it's 17, obviously, right? So it's like time premium. That's what it is. And how do I decide? Well, again, it's do I want a cash grab? For example, I sold some Big Bear AI $7 cash secure puts today out to 2027, and I brought in I think like 55%. It was like 360 or 365 for those. That's a big chunk of change, for basically putting $700 away and then getting 360 back right then and there, 365. That's insane. Because for 14 months, I'm getting a return on my investment is well over 50%, 55%, right? But you got to take into account the fact that I have my money on in a fund that brings me in 4 or 5% annual returns. So I could put something like that money. I use it for cash secure puts. Is a Charles Schwab fund, and as long as it's cash and not stock, it's cash. It's being used by Charles Schwab. It's a Charles Schwab account, and I'm doing the cash secure puts with Charles Schwab, so it's bringing me in 4 to 5% yearly, and it stacks, with the 55% that I'm getting back. Next year, it's going to be more than that, though, because remember, it's compounding, right? So I'm going to get, 5%, of like the overall, and not just 5% and 5%. It's like it's compounding. So quite a beautiful thing. But again, I'm okay taking that type of risk, right? Because I don't think that Big Bear AI is going to be $7 in 2027. And I mean, after it's all said and done, I'm getting well over 65% return on putting away, $700. It really was $7,000, but I'm putting away $7,000, and I'm getting back almost like $4,000. No bank is going to give me that, and that's kind of like my rainy fund, right? That's like my bank account. I really don't have money in savings. I mean, I have my emergency fund savings, but like most of my money in savings, I don't have a cash account like a checking account. Like that's my checking account, right? So like it just grows, and then maybe every so often I'll take money out of it, and then put it in my other account so that I can buy stock, or they'll take. If I got put those shares, then they'll just obviously, they'll take the money out and give me the shares. No big deal. So that's what I was looking to have anyway. So let's see here. So Misty saying, whenever you're at the McDonald's drive-thru and hear that extra happy, hi, would you be using your mobile app? That's SoundHound. That's exactly it. That's it. They're everywhere, and people have no idea that SoundHound AI is everywhere, and they're getting paid so much from so many different places. It's just they're expanding, so they're putting money back into the business, right, into the company. So when it rips, it's going to rip. It's not going to stay here for long. I think right now it's one of those that you got to keep adding shares as much as you can. It's just like SoFi. When I was adding SoFi shares, I just added and added and added. And then next thing you know, I had over 20,000 shares. And then I just decided that's it. And then I started, into like putting money into AI, and I just added, and then Unity, and then, it's everywhere else. But yeah, no, like I'm just adding at this point. Same thing with RXRX. I add every chance I get. Juan Velasquez is saying, see you tomorrow. I got to go and cook dinner for my other half. Otherwise, she'll get on my case. Thanks, Savage. No doubt. Actually, my missus is probably on her way, so I got to get off myself. I got to go make her a steak. Mama, got to go make Mama a sandwich. So, yeah. Willie Nighthawk saying, thanks, Savage. Glad we made it through the day. Rory Yitty saying, night one. No, I mean, when is it better to write it in the money or out of the money? It's up to you. Roaring, it is all up to you. Where do you feel comfortable? I feel fairly confident writing on BBAI or SoundHound because the premium is so juicy, and the stock is so low that it justifies it being written at that out the money. Or in the money, cash secure speak, that'll be in the money because it's justified. It's so close to like nothing, right? That I'm totally okay taking a stance. And worst case scenario, I lose, $300. So it's a lot more palatable. But it won't. It's a good company. Division is saying up 8% and 4% after hours with Smart Source after you mentioned it. And I told you guys, Smart Source. Man, once that stock flies, it's going to fly. So right now, if it comes to Rocket, RKT, Open Door Technologies, and Smart Source. Once rate cuts happen, those stocks are going to 5x or 10x. Mark my words. You heard it here from the Savage of Wall Street. God damn it. All right. So Rory Yeti saying, I thought Fidelity did the interest on the cash collateral with cash secure puts, but I haven't seen any interest yet. I don't know. You got to talk to them. I don't. I mean, I trade with Fidelity, but that's just for covered calls. I've never done cash secure puts. My that ETF, that fund is with Charles Schwab that I'm talking about. I don't know about Fidelity. I'm done with them. Anyways, I gotta go, savages, my fellow simpletons and degenerates. Thank you for watching. Tomorrow I'm back on at 8:30 a.m. Remember, thank you so much for watching Roaring Yiddy, The Visual Arts, Willie Idaho, Juan Velasquez, Misty Tree, Tom Kaufman, Willie Idaho, Charlie C2, Kent's mom for sure. Always be writing. CKT, Andres de la Torre. Guys, I can't say enough how much I appreciate you guys. Hector, I know you're out there. Thank you so much for watching, guys. Remember, let's look at these up. Honorable mention is Terra Wolf. Roaring Titty put me up onto Terra Wolf, and it's great stock. You guys got to just do your due diligence. Keep finding out about it. But, that's respect for her or to her for letting me and putting me on that, because I've started a position, and I'm happy I did. It's a great stock. Honorable mention of the other 5 I mentioned. Until then, you guys have a good night. I'll see you guys tomorrow, you knuckleheads. Peace out.